Here's Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, where business and politics meet. Well, now look, coming up, we've got breaking news, haven't we? The NAB has gone into a pause and then a trading halt, awaiting an announcement around a leadership change. That's all we know. We're standing by for another announcement. Former ACCC Chief Professor Allan Fels gives us his marks out of 10 on the Royal Commission report and how he thinks regulators will go heading to court. Mirvac Chief Susan Lloyd-Hurwitz talks to Leo Shanahan on her results and very interesting insights on the housing market there. And extreme weather, blackout. What's the industry doing to firm up renewable energy? Snowy Hydro Chief Paul Broad joins me in the studio, so a very big show tonight. Well, look, for all those calling for big bank scalps at the Royal Commission, final report from Kenneth Hayne may well have delivered today, with NAB shares first in a pause about 3:30 and then in a trading halt around a change in leadership, with an expectation that the news will be out today. The ABC's Lee Sales has tweeted that she'll be interviewing Chairman Ken Henry this evening. Speculation's been rife. Will it be Andrew Thorburn, or will it be both the CEO and the Chair, Ken Henry? Personally, I think Ken Henry might dig in, and I think he should stay for stability. I've spoken and written about this idea that NAB Chair Ken Henry and his team might have got under the skin of the Commissioner Kenneth Hayne, which, dare I say again, could have played a part in the singling out and stringing up of Henry and Thorburn. This is not to underplay the huge scandal of fee-for-no-service with customers at the NAB, not at all. But if that is a true thing, and if that is privately how Ken Henry might see it, then one would think that the last thing he'd want to do would be to resign. Andrew Thorburn has had a hell of a week, hasn't he? He cut short his long service leave after that special mention from Kenneth Hayne and fronted the media. A question I have to ask you is around your own judgment. I mean, why is it that a CEO of one of the big four banks, you know, with all this going on, with the Kenneth report, you failed the REM report, the REM report in December, you've got massive restructuring changes, you've got this ASIC action. Was that the right decision? Why on earth did you decide to take extended leave?
Well, Ticky, I think the bigger picture here is our bank has a clear strategy. We have a very competent management team. We've laid out to the market what we're doing, and we're implementing that. I and all our leaders and leaders in corporate Australia, it's demanding. You need energy, you need a break, you have a life outside the company. I mean, I've got a marriage, I've got children, I've got elderly parents. They're the people who I want to spend some time with, and I don't think it's unreasonable that, particularly as I've been in the bank 14 years and you build up long service leave, that I do take that. I think that is important for mental and physical health. Yes. And to lead in a sustainable long way, and I want a role model to people inside the company that that's okay to do.
Well, news.com.au, amongst others, gave Andrew Thorburn a roasting after that interview. I do think that, even straight after the Hayne report was public, that the board's plan would have been to keep Thorburn at the helm for much of the dirty work repair that was required and make way for a clean skin like Mike Baird a little later. But there's another huge factor in this, I think, and it is the case of the alleged procurement fraud against Andrew Thorburns' former executive assistant, Rosemary Rogers, which could be overwhelming things. Today, reporters Baker and McKenzie at the Sydney Morning Herald were stirring the possum. The news story that Rogers allegedly rorted a $500,000 holiday. No suggestion that Mr. Thorburn has any wrongdoing in this, but who knows what else might come out in court. EAs know your strengths, they know your weaknesses. And guess what? That's about trust. Look, we'll have also the insights from Margin Calls World Glasgow on this, who's been following all the NAB stories very, very closely. All right, well, can I first go to our chief reporter, Leo Shanahan? Nothing yet.
Nothing yet, Ticky. I'm not seeing any update on the ASX as I refresh it over and over. But yes, we are expecting, as you said, Andrew Thorburn or Ken Henry, or perhaps both. Or perhaps both.
I mean, that's what some people in the market have been saying.
Now, I've recently just heard it could well be both. I think, as you said, that would be a big gamble for the bank because it could be irresponsible to leave that level of vacuum in the leadership. If it's straight away, that would be a bad signal. I think maybe Henry could say, "Look, I'm gone in 6 months or 8 months." Thorburn straight away. So, look, I guess we'll all find out. I was just on air with David Spears on Sky, and I said I don't think it will be both. Now I'm doubting myself, but I guess we'll find out.
I mean, Ken Henry had it all, set out for them. He has very good relationships with Labor, doesn't he? You know, if he hung around till May, I mean, I was thinking this was going to be his time, really.
There's no political capital in Labor sucking up to Ken Henry, is there? I mean, at the moment,
not obviously,
banks are persona non grata with the Labor Party, and they see the further they push that, the better. So especially someone as although you might think he's got historical friendships with the Labor Party, someone who's been so harshly criticised by the Hayne report, there's no real benefit in that relationship. No,
you make a good point. You make a good point. So look, if Andrew Thorburn goes, let's start with their CEO. What are we looking at? Well,
I think Mike Baird is definitely the most likely. I mean,
he runs the retail branch at the moment.
Runs the retail branch at the moment. He's got extensive banking experience and, of course, extraordinary political and leadership experience as a former Treasurer of as a former Premier, I should say.
And, greyhounds aside, a popular bloke.
And a popular bloke and a likeable bloke and a guy who understands politics. And at this point, maybe they do need that political edge.
Is he ready for it?
Well, that'll be the big question, and I think they do risk by forcing Thorburn out, because I don't think Thorburn started this week thinking he would resign.
No.
And even after the report, and during that interview, I believe that he actually didn't think he would resign, and that the board had backed him this week earlier. So have they changed in the last 2 days? As you said, I think that's got a lot to do with the Rosemary Rogers story that I've been working on as well, and I think that this is going to drip out in this period, and it's going to be increasingly damaging. But to return to Baird, do they risk putting Baird in now and perhaps burning a clean skin of someone with such great potential too early?
Yeah. Okay, so anyone else in the frame for the CEO?
Well, there's Philip Cronican, who I understand is on the board.
Well, he's very experienced.
He's very experienced and he's a chief risk officer, I believe, on the risk committee. Experienced the bank, knows the bank inside out. So it could be very fortuitous for him that they would choose someone like him in this position rather than backing Baird, because he knows the bank and he could set up that defensive position a lot better.
You'd like to do it, you think?
Well, I imagine so. I haven't spoken to him about it.
Now, look, the other point is if Ken Henry does depart, who replaces him?
Well, yes. I mean, there's different names being thrown around. There's like Anne Sherry, I had heard earlier. But, it's really hard to know at this juncture, because I don't think they were preparing for departure.
Anne Sherry of Carnival Cruises, Anne Sherry was, correct me if I'm wrong, she was a banker, wasn't she?
Yeah.
I think it was Wednesday.
She was a banker and, has pretty extensive experience. And I think you mentioned Will Glasgow nominated her earlier in this week as a possible takeover for Henry. So, look, I think she's definitely a possibility as the new chairman.
All right. Well, we're still waiting. But Leo Shanahan, thanks for all that so far.
Thank you.
Well, as I say, we could be seeing one immediate knock-on of Commissioner Kenneth Haynes' report, whichever way you cut it. His singling out of NAB Chair Ken Henry and CEO Andrew Thorburn has, well, looks like it's going to deliver a big scalp. To talk more on what this and the other broader implications are of Kenneth Haynes' report, I am joined by former regulator, former ACCC boss, Professor Allan Fels from Melbourne. Allan, it's good to see you there. Can I just ask you off the top what you make of this trading halt and the implications at NAB?
Well, obviously the CEO and/or chair will go. My guess would be the CEO for sure. My guess, maybe Ken Henry may stay a little longer, but his days aren't numbered. And that would be a big scalp for the Royal Commission. My own take on the Royal Commission is that after all the drama, the exposure of scandal, the condemnation of banks, the actual remedies that they came up with are moderate, not particularly big, but if they start to get big scalps, that changes the outlook a bit.
When you say moderate, should they have been less moderate? I mean, for example, vertical integration.
Yes, I would certainly have gone through vertical integration. Royal Commissions give you a once-in-a-generation opportunity to make big changes. Now, I don't think this is the outcome of what they've come up with. There is a deep conflict of interest between the banks giving so-called impartial, independent advice and marketing their own products, and all the data shows that the people who take advice from banks buy their products, even if they're worse. The only deep solution is structural separation. But that might have been curtains for AMP if that had happened. That's right. It is a big call. And in fact, my views are a little more complicated. I think it should have been dug into much more deeply rather than rather superficially dismissed. If it was going to be done, it had to be done in this Royal Commission.
All right. Look, just a quick one. Do you think, what do you think of the singling out, we're talking about scalps here, but the singling out in particular of NAB's Ken Henry and Andrew Thorburn by Kenneth Hayne? And do you think that there was any element of tension between Hayne and Henry, and which might have touched that commentary?
Well, I had wondered about it. It's really impossible for any of us to know, but I just had the impression that the other CEOs had done their PR preparations very thoroughly and were fully rehearsed on all the right things to say, the deep apologies, the commitment, the unconditional commitment to do things. And was it that, you know, Thorburn and Henry in particular hadn't quite prepared themselves to go down that route? Maybe Henry was being very frank and truthful. But it was enough for the Commissioner to seize on. I felt a little bit worried that he might have been relying too heavily on a short period in the witness box to draw such big conclusions. But he has. That's history. And there's now scalps, which in a sense change a little bit your view on the Commission. On the whole, the output was fairly modest. And on the other hand, you know, they built up so much drama that distrust in the banks and financial institutions has skyrocketed. It was their own orchestration.
Yes.
And then the rather modest proposals won't remove the doubt they've created in the public mind. So it's a big mismatch. So what you're saying is that, you know, there was some obligation, the Royal Commission, having gone out there and created this theatre, if you like, there was some responsibility to pull things back and either deliver a harder verdict or certainly calm the situation down, which it doesn't seem to have done. So they had a sense of responsibility there, which they failed to deliver on? Yes, and indeed, in the opening parts of the report, there's a very strong emphasis on the fact that the problem that they're talked about in the Commission stems above all from failure at the top, at the level of boards and CEOs. And then you go through the recommendations and they don't really have anything very substantial there. And indeed, they're talking about some smaller issues. I mean, they're not unimportant ones, mortgage brokers and all that kind of thing. But now that's how I feel about it. If I were defending Hayne, I suppose I'd say, well, wait and see. I've referred a number of matters to ASIC for prosecution. But I'm a bit sceptical of that. I think ASIC will have trouble. First of all, there's the whole question of getting evidence showing that a firm has done wrong. But then there's another issue going on to actually litigate against individuals getting jail sentences. That's another big step. This is going to take a long time. And although I'm a prime critic of ASIC for not litigating enough, I also want to acknowledge this is an area of law where it's never particularly easy to get results. These sort of cases are going to take years before we see the results. They'll be fiercely defended. If they're criminal, they have to have a unanimous jury verdict. That's the provision in the Constitution about our Commonwealth. Under Commonwealth law, anyway, you need a unanimous jury verdict.
Right, so, you know, I was going to ask you about Kenneth Haynes. Again, his clear, blunt message to regulators was head to court, fellas, you know, take these big bad boys to court. Now, what you're saying is, well, that's great to hear, but it's really hard. I mean, are we going to see an effort to do that and then the pendulum probably swing back again?
Well, certainly we will see that effort. There's every reason to think that. He's urged it on them. He said, make the presumption, you go to court. They've got an oversight body that'll be saying the same thing. Will they swing back in a few years? My own feel about the whole situation is that we will get an improvement in bank culture for a time, but I have a lot of doubts as to the sustainability over, say, more than 3 or 4 years. I think the history in this area is tends to be lapse and to fall back.
Yeah. So would you be looking at, you know, a major restructuring, making big banks smaller, forcing breakups? Because that does then start impacting the strength of the overall economy. I mean, we hear the 4 pillars are what holds Australia together.
Well, I wouldn't break up the banks like that, but I'd certainly have a heavy presumption in favour of separating the financial advice. I think we should have a debate in this country, as there has been in other countries, of whether you separate basic banking, deposit taking and lending, which is protected by the implicit guarantee. I'd distinguish that from all the other activities of the banks, the trading, the investment and so on, the wealth management, which I feel they do attract the implicit guarantee. And I think there is a case for either separating them or having extremely strong ring fencing. That's what's happening in the UK. The UK has now got very strong ring fencing, and the US has also been taking some moves after 2011.
OK, well, that's clearly not likely to happen anytime soon. What is likely to happen, and indeed if Labor gets in very, very strongly, is changes to mortgage broking and taking it right back to the lender paying for, you know, the selection of the loan. There's been a lot of talk and argy-bargy about this. Obviously, the coalition not willing to accept it immediately anyway. What do you think about that as a former competition czar?
I'm inclined to go with Hayne and to go through with what he's saying. The consumers, of course, they don't like paying upfront fees and all of that, but the fact is consumers are paying through their nose without knowing it for the services they get from mortgage brokers, and there are terrible conflicts of interest in the way they do things at the moment. They've had their chance, the Royal Commission's come along and recommended it should happen. And in addition, I think that the whole impact of the Royal Commission will be a bit slight if they don't deliver at least on that recommendation. The other recommendations, they're not unimportant, but if the major, almost the major recommendation can't get through, I think we'll look back on the Commission and say not much happened.
Finally, Allan Fels, can I ask you how you reckon that another former ACCC chief is going to go, Graham Samuel, with APRA?
I imagine he'll do a fine job.
But do you think there's a lot to be done there? I mean, as APRA it's quite secondary to ASIC, I suppose, but does it need to change? Does it need to be less of a big brother?
Yes, it needs changes. It's lost, as you imply, some functions to ASIC, and ASIC is the big call. But APRA needs to improve. I just wanted to mention, in the 1990s, the Trade Practices Commission, the early 90s, strongly criticised insurance, particularly life insurance, and there's a bit of a reaction short term but 20 years later, it's all the same. There's a lesson there about the follow-through on the Royal Commission.
Professor Allan Fels, so good to get you on this very important night. Thank you very much for your insights.
Thank you, Ticky.
Right, well, after the break, we'll discuss the big NAB leadership announcement with the Australian's margin call editor, Will Glasgow.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, let's talk more about leadership changes at the NAB. For more, I'm welcoming Will Glasgow, the Australian's margin call editor, joins me live at the desk. Will, boy, this is a massive day.
Is it ever, yeah?
Andrew Thorburn has had, as I've said, a hell of a week.
Yeah, the year's the year he's been back from work for what, 7 days now, 8 days and counting, I think.
And had a pummelling, to be fair.
Yeah, had a pummelling. Had 5.5 weeks off. He's been back, had about the worst 8 days at work you could have.
Yes.
And it may be all about to end.
Yes. Well, the other issue that has come up, of course, is the issue of the court case, the procurement case, Rosemary Rogers. To what extent do you think this is a factor?
Oh, it's a huge one. It's a huge factor, and it's made him look like a dead man walking for a long time. One of the things that keeps surprising me about NAB is how surprised they keep being by things that we know are going to happen. We don't know the timing of these things, but we do know that there's an ongoing New South Wales police fraud investigation into a multi-million-dollar fraud that ran out of his office, or alleged fraud that was run out of his office.
Yeah. Now, not to say that, you know, there's no suggestion that he's done anything wrong.
None at all.
But he's wound up in it. It's his EA.
And it's about
under the allegation.
$100 million of executive expenses of very embarrassing things, first-class travel, Lux hotels, all this stuff. And there's been a drip of details about this, and each one that comes out, you just need one little bit of colour, and it cooks up the whole story, and it looks absolutely awful, and it raises questions of
Where do you think
character
leaks have been coming from?
Oh, from the New South Wales police investigation.
You think?
I think so, yeah.
Not within NAB?
Maybe NAB as well. I mean, people have been interviewed about things going on there, and, you know, some of the details are pretty shocking to them. And I think there's a sense internally at NAB, and has been for at least since the Hayne report came out, that Andrew Thorburn gone. They couldn't quite understand the defiance with which NAB PR has been trying to pretend that Andrew Thorburn could continue because he's got 2.5 years to go on a turnaround plan that no one thinks he's going to see through.
So Ken Henry, also singled out by Kenneth Hayne.
Sure.
What do you think of that singling out?
Well, the singling out, I mean, couldn't have been more damning and couldn't have made their time more difficult this week. But I think the response to it, they compounded things. Ken Henry, you know, part of the reason he was singled out by Hayne was this kind of tin air, which is really humiliating for him because he had, or ironic, because he, as he told us in the statement, had been instrumental in calling for the Royal Commission. For him to then be told by the Commissioner that he didn't seem to get it, he didn't seem to understand the size of the cultural problems, was really
Allan Fels put it just now, you know, perhaps he was too straight talking in his explanation. You know.
Well, there's that, but then, you know, I think Ken Henry's problems are much bigger than that. I mean, there is, in terms of judgment problems, like Ken has got himself, normally with this, you know, Andrew Thorburn being singled out in the Royal Commission report and this ongoing situation, this fraud investigation, which is leading to horrific press, you'd be able to use that to just say, look, however good we think you are as a CEO, this has just become untenable. Yeah. Ken Henry hasn't made that decision. He's also made some really odd decisions, like allowing Andrew Thorburn to take another month's leave after 5.5 weeks
But that comes back to this court case as well, I think, you know,
well,
maybe.
It might come back to that, but Ken Henry still signed off, along with his board, him doing, the schedule was for Thorburn to take that leave after their little results update tomorrow. I mean, that is a bizarre, how they couldn't see that this was going to be an exciting week. It's maybe not this exciting, not that they'd been named and shamed personally by Kenneth Hayne, but it was going to be a week or two to hang around at work. The idea that he'd go off on leave again seems extraordinary. But,
you know, presumably for, you know, Ken Henry to go, for Andrew Thorburn to go, particularly at the same time, that would lead to, you know, carnage, wouldn't it? I mean,
yeah, it sure would. And the only way you if that happens, and it's possible,
Yeah.
I mean, I can't imagine that we're going to hear that Andrew Thorburn not going away by the end of today very soon. It'll just be what kind of arrangement, how long is he going to work out? Does the board ask for more time to run a process, or have they picked someone? That's far from clear.
Yes.
Because they've had a lot of attrition.
What about Mike Baird?
Well, Mike Baird's a possibility, but, you know, if we go back 6 months ago, Anthony Cahill was seen as the red-hot favourite to, you know, he was Andrew Thorburn's chosen successor. He was having sort of weekly dinners with Thorburn. He was there at all the parliamentary committees. Then he left to London. He didn't like... Now, whether he just didn't like the look of the local banking scene, or it was more peculiar or particular to NAB, it's not clear. But he didn't like something there, and he left. So suddenly Baird's, you know, front of the queue. But he's not long back in banking, and he's only just moved into a new role. He's, you know, his first role outside of institutional banking in his whole career.
Yes.
So normally you'd say no way, but NAB's in a funny position right now.
Goodness me, I think this is going to be a long night, possibly. Well, Glasgow, thank you very much.
Thanks for having me.
Now, property developer Mirvac reporting a near 40% surge in half-yearly profit. Yes, there has been other news. It offered up slightly more bullish outlook, helped by growth from investment portfolio and strong demand for office space. The rise signalling how the company has adapted to a cooling housing market. Net profit for the period coming in just shy of $650 million, with operating profit, excluding one-off costs, up 26% to $290 million. On the outlook, Mirvac has tightened prior guidance for operating earnings to between 16.9 and 17.1 cents per share, same time reaffirming its full-year dividend of 1.6 cents per security. Well, for more on the results, Leo Shanahan spoke with Mirvac CEO Susan Lloyd-Hurwitz a short time ago.
Susan Lloyd-Hurwitz, thanks so much for joining us.
It's a pleasure.
Now, look, I have to congratulate you on these results today. Your shares are a 10-year high this morning, apparently, up 3.5%.
Thank you very much. Very proud of the set of results that we've delivered today, particularly in the challenging residential market conditions.
Yeah, I mean, it's highly impressive. You've got 400, compared to the year earlier, 648 million compared to 465 million a year earlier. What is driving that?
It's really been driven by the growth in our office and industrial portfolio, where we have been positioning that portfolio to create Australia's youngest, lowest capex, most modern office portfolio using our asset creation capabilities. And that income is now flowing through the business. We have award-winning developments coming into the portfolio, driving 5% per annum passive earnings growth, and that is really driving very strong results in the business as the growth engine.
Yeah, and the Property Trust doing quite well?
Yeah, so across the passive business, both our retail is performing as we expect, and it's in very good markets, very good sub-markets with low unemployment, high density, high population growth, high income, and all of our metrics right across the board, whether it's MAT growth or whether it's incentives or leasing spreads, they're all positive, and we're very proud of the result that we've delivered.
Now, obviously, within this current environment where there's a property market downturn, especially in the major cities where you're centred as well, how have you managed to achieve this?
I think it's really important that the market gets away from thinking about average price. There is no such thing as the average market. There is an enormous amount of variation across cities and across sub-markets. And we have, with a laser-like focus, selected projects that we bought well, 6 years ago on average, in markets that are affluent, low arrears, good credit customers, good amenity, close to transport. And the proof is we've settled 1,067 lots and we have a less than 2% default rate, which is exactly what it's been for the long run average. So a very solid set of results.
Now, your luxury division is probably what you're best known for. Does that tell you something about the nature of this downturn and the demand still at the top end of the market?
Well, we're definitely not a luxury builder, developer anymore. We are right from land subdivision through built form, medium density and apartments. In fact, our median apartment price is $1 million. So it is not characterised by this luxury portfolio. And we would say that demand has really continued from owner-occupiers. First home buyers are back in the market. Investor demand is weaker, but we build for the domestic owner-occupier, and that market is continuing to be solid. We did 900 sales in the half as well as 1,000 settlements, so very steady pace.
What about commercial? What kind of growth are you seeing there? And obviously you've done well out of this period as well in commercial and industrial.
So from an office point of view, I've never seen office market conditions as strong as they are now in my entire career. We've got vacancy rates 3-4% in Sydney and Melbourne. We've got strong net absorption, particularly in Melbourne. And so we're seeing very strong rent reversion in our portfolio. We're seeing our NOI was up 10% for the year. We've got the pipeline that we've been creating in Sydney and Melbourne with major assets now coming into the portfolio. They're 84% pre-leased. They're just very buoyant conditions, and we expect them to continue for another few years at least.
Why are you seeing that environment being so buoyant? The chat around office environments a few years ago was all either kind of moving out of the big cities or home-based, and now it seems, and this is true of what a lot of people are saying, it's the office environment, especially in the big cities, is doing quite well. People
want to work together. And we are doing a lot of work with our customers around the future of workplace and how do people want to use workplace as part of their strategic competitive advantage. And to do that, they want to occupy buildings in quite a dense way. They want to use flexible working. And to do that, you need a modern portfolio that can be configured in a way that people want to use space today.
Yeah, okay. And what about retail? We've obviously seen a downturn in retail. Does that affect you at all? Is there much exposure in retail?
Well, again, we have a very significant retail portfolio that performs at the top of its class in Australia because of the submarkets that we've selected to work in. Again, affluent, highly populated, growing, low unemployment markets. People living in apartments who earn a lot of money go out and they spend. And our retail malls are performing more functions than just a place to go and buy things. They're performing a key part of the urban fabric, including being a distribution means for that last mile distribution to get from retailer to consumer. So our portfolio is very resilient and has performed exceptionally well.
Yeah, I wanted to ask you as well about, it can't all be good news. There must be some headwinds that you're seeing within residential in particular. What kind of challenges are there? What concerns you most?
We were very clear with the market today there is no getting away from deteriorating residential conditions. We have generally lower prices, although I do like to stay away from averages. We have falling volumes. We have low auction clearance rates. You see the approvals data is sharply off. So those conditions are challenging, and there's no doubt that our sales volumes have slowed compared to the previous corresponding period. But we are very confident in our embedded margin, the customers that we focus on being domestic owner-occupiers. And in fact, we're gearing the business up to start restocking because we think we're about to head into a period of undersupply where we will again just not build enough dwellings for the 110,000 people that come to live in Sydney and Melbourne every year.
You think there will be a period of undersupply based on what kind of assumptions?
So in a year or so, because we'll get through the current completions, if you assume the amount of people that are coming to Sydney and Melbourne, you assume a household formation rate, you need to build in the order of something 40,000 dwellings a year. We don't build anywhere near that on average. And so we are assuming that there's going to be an undersupply within a year or two, and we're gearing the business up for that.
How bad do you think the downturn, though, at the moment can get? Will this continue on for the next year? RBA yesterday basically saying they think it will continue, at least in the short term.
I would agree with that. I think that what has changed here is not the usual driver of a downturn, which is usually increasing interest rates or increasing unemployment. What's happened here is it's a credit tightening, which is causing lack of customer confidence, even if they can get access to finance. And that's the trigger. And we don't see those conditions changing in the short term, so we believe we will have this challenging credit situation for another year. There probably will be more price falls on average again, as much as I hate that. Again, that plays to the type of customer that you are accessing, their motivations for buying, where you've located your projects. I think we said this morning, the head of residential said that not all residential is created equal, and there's nothing more true.
Now, it's an election year. Are you expecting any kind of infrastructure boom around the election? And I also wanted to ask you your opinion on the Labor opposition's, potential government's, negative gearing policy.
I'll start with negative gearing. I'm the president of the Property Council as well, and we really want to see the detail as an industry before we can assess what is the real impact of that. We have got extensive dialogue with both sides of the political fence around if there was to be a change, how would it be implemented, what would it mean. So it's really too early to tell. We just don't know the detail of what that would all mean. In terms of infrastructure, there is clearly already massive infrastructure spend going on in Sydney, which is really catch up from all the infrastructure that wasn't built and needed to be. And we are very focused around where we can hook into that amenity and that transport infrastructure as we're delivering both industrial projects on motorway nodes or residential projects around high amenity and transport infrastructure.
Now, Royal Commission findings from the Hayne Royal Commission were handed down this week. I'm interested, one of the key recommendations is around mortgage brokers, and basically would stop them being able to continue to collect trailing commissions and perhaps in future not collect any commissions at all. Are you concerned about that as far as your business model?
I think, again, with my President of the Property Council hat on, we would be concerned about not lessening competition in the mortgage market. Now, however we get to that, we just don't want the outcome of any recommendations to be an inadvertent consequence that we reduce competition in that market. So there's some things to be worked through there, and it's interesting that the government, that's the one recommendation they haven't yet said that they are going to implement. There's, I think, a lot of thinking needs to be done around the structure of that industry so we can fix problems but not create another unintended consequence on the side of it.
All right, Susan Lloyd-Hurwitz, thanks so much for joining us.
Thank you.
Now, we should say the big news, of course, is around NAB and a change in leadership. A few other things have happened today. One is that the CEO of David Thomas, has actually resigned. Woolworths boss Alan Moyer is stepping in until they can find somebody new. And some better news for AMP shareholders. Could the bottom be reached? Because CEO Francesco De Ferrari, he's putting in the man he brought in from Singapore from Credit Suisse to be head of wealth. So we'll cover that a little later in the week. Now, after the break, as the heatwave wages on, so too does the energy debate. Paul Broad, Snowy Hydro CEO, will weigh in next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, no doubt the Royal Commission has diverted market and political attention towards the Hayne report, but the other massive debate in the country continues to be around energy, and it will be a big deal at the election. Over the summer, we have had blackouts, and it's still unclear how the progress towards firmed-up power, especially renewable power, is going. Well, joining me, CEO of one of the biggest firmers up, CEO of Snowy Hydro, Paul Broad. Paul, thanks for coming in.
My pleasure.
Can I ask you about these blackouts first? We had them in Victoria. Why? Was it necessary?
Well, if there was connection into New South Wales was bigger and stronger, we had more than enough power in New South Wales. In fact, in Snowy, it's quite mad. Our Murray side was going flat out. Our Tumut side was sitting near idle most of the day. So we had more than enough power. We've got to think about connecting.
Yeah.
It's like
Why hasn't that happened?
It's like the different gauge railway lines, you know. It gets down to the border and some weak connections. And
but who's responsible for driving that? Is that the government? Is that the Australian Energy Market Commission? Is it the market operator?
So our EMO's put out a plan, and it's just too long. We need to get on with it. And the plan down in Victoria, looking at 2030, we think it should be in the next 5 years. The one north, we actually lobbied with the New South Wales government to bring it sooner, because we can cover for Liddell closing.
Yes.
Now, we get the transmission up, we, Snowy and the other players, will more than cover for the deal. You don't have to sit here and wait till some runaway train hits you. We need to get in front of the game, and New South Wales
So this is because 2.0 will be up and going by the time...
No, just an existing Snowy. We have more power in our existing Snowy than we can get to market, because we get constrained by the existing transmission.
Right.
How stupid is that? So
that is, and that's very much the case. If there were a blackout in Sydney, then presumably that's the same issue.
Same issue. So we upgraded our plant down in Tumut, our T3 plant.
Yes.
And the efficiencies now, we can get 300 megawatts more out of that plant. We actually bring some of Murray in. We can cover for Liddell very easily.
So what do you think of today's news that the Energy Market Commission has rejected Audrey Zibelman's idea at the market operator to have this permanent strategic reserve of energy?
I really do not like this permanent strategic reserve. It sounds like another player in the marketplace. When they last did it, you know, the effective price was something like $60,000 a megawatt hour. That's multiple times what the market would have cost us. So this thing isn't free. And what happens then, it gets spread amongst all the players. It doesn't have the transparency attached to it.
Yes.
The whole idea of market prices is to signal for new entrants or new expanded capacity.
But presumably she's coming at it from the point of view of, well, we have had blackouts, the transmission lines aren't here, we need to have some reserve.
Well, I understand that argument, and I truly do, and I have a lot of sympathy for the argument for blackouts. And people get paid to demand manage. And I get that argument, and if people make conscious decisions to do that, fine. But I'm not a fan at all. I think the more you intervene, the more uncertainty you make for new increments of investment, the less it's going to happen, the more the intervention grows, and I think consumers are worse off.
All right, well, let's move to you guys. Snowy 2.0s, the recent contractor announcements, and how are you going with your relationship negotiations with government?
Great,
as to how you'll be structured?
The government relationships are long and hard, but they're actually all on track. The contractors have done amazing jobs. You know, the amount of spoil that we thought you'd have to take out of the tunnels and the cabins.
I'm going to interrupt you. I've just heard that both Ken Henry at NAB and Andrew Thorburn, CEO of NAB, have resigned. That is the latest news that we have to hand at the moment. I'll just see if there's anything that I can see here. Nothing's come through on the ASX yet for me. But yes, Mr. Chronican from the board is coming down as CEO, and I understand that is effective pretty much immediately. So there we go. What do you reckon?
That's big news, you know, and I certainly know Ken Henry well from my old economic days, and have the highest regard for him as a public servant in charge of the Treasury. Obviously, as the chairman of the bank, there's been issues raised, and I think you've got to take responsibility. And
well, I must say I wasn't pipping Ken Henry to go as well. I really wasn't. And it's going to be quite dramatic to lose a CEO and a chief executive simultaneously.
Yeah, no, so I thought chairman of the board might have a different view than the chief executive who runs the company.
Yes.
So anyway, I see it. Most of the responsibility for that sits with me as the CEO running the company. The board collectively, as opposed to the chairman individually, takes responsibility. So I have a different mindset about that. I'm like you. The last one I thought to go would be Ken.
Yeah. 2 scalps from the Royal Commission. What did you think of the Royal Commission?
I thought the Royal Commission had a challenge about this structural separation within the banks.
Yes.
And I really did think that needed to be challenged more. And I thought I thought he may have squibbed it a bit in terms of really challenging that split. And I think it's a bit of poacher gamekeeper. Customers cannot see through with any form of transparency the relationship between the bank and its advice and how that works. And I think they've gone down the value chain to prevent a lot of that from, you know, to create value for themselves with necessarily not in customers' interest.
Yep. So can I take it back to your sector then? So what do you think about Snowy also owning you know, retail electricity?
Yeah, no, it's an interesting debate now, and I think that's a worthy debate we in the industry got to have, and the government's got to have it with us. I think rather than talking of forcibly separating us, we should start talking about how the dynamics of a fully integrated retail and gen businesses work, because the wholesale market is very different. And we supported the ACCC when they opposed AGL by Macquarie Generation a few years ago. So we think the more players in the market at both wholesale and retail level, the better consumers and the more efficient the market.
All right. Look, this, just forgive me, but I'm just going to read a little bit from the ASX announcement from NAB. Yes, Chief Executive Officer Andrew Thorburn, Dr. Ken Henry, advised they'd leave the bank. The board will initiate a global search process for the CEO role. While considering a range of quality internal candidates, Andrew Thorburn will finish on the 28th of February. Dr. Henry indicated he would retire from the board once a new permanent CEO has been appointed, so there will be some continuation there. The board, meanwhile, has asked Philip Chronican, current NAB director with, as we know, extensive banking experience, to act as acting CEO. So very big news with both the top leaders at NAB gone tonight. I'll just finish up, Paul, sorry to interrupt this, but going forward, what does it mean for customers and their electricity prices?
Well, I encourage customers to keep going out and testing the market.
Yes, which they seem to be very reluctant to do.
I don't understand that, because it's very easy to swap these days. The old days when rules and regulations, that's all gone. Yeah. So get on the phone, change, and, you know, customers will gain and business will get better,
yes,
whether it be for banks, whether it be for financial advice, yes, or for energy, by keep testing the markets. That's what's going to be in customer.
And you've still got your toe in with investments despite the political uncertainty with the election?
Absolutely.
In renewables?
Absolutely. We're going big, and we're going to go very strong into a firm renewable product. Because
you've got low interest rates for going forward?
Yeah, low interest rate. Yeah, but we have a great product with Snowy and renewables. That's a great combination.
Paul Broad, great to have you in. Thank you so much.
My pleasure.
All right, well, on a very big day. After the break, Brexit's impact on the European markets, few changes there. Peter Schaffrik from RBC Capital Markets next.
Now, back to Ticky.
A place in hell.
Let's move overseas. The European Council President Donald Tusk says there is a special place in hell for people who promoted Brexit without a plan to see it through. Pro-Brexit MPs have accused Mr Tusk of arrogance, while Downing Street warned him to consider whether his language was helpful. Meanwhile, the EU has insisted it will not be making any new offers to the British Prime Minister over her Brexit deal. Gosh, it's Groundhog Day, isn't it? President of the European Commission, Jean-Claude Juncker, says the backstop is an issue for the EU and Ireland, and not the UK and Ireland. Well, for more on what's going on with Brexit and how it's impacting European markets, Peter Schaffrik, RBC Capital Markets, Head of European Economics and Interest Rate Strategy, joins me at the desk. Peter, nice to talk. Very busy day domestically, obviously, with two heads rolling at NAB, but Brexit is in similar chaos, isn't it? Now, Theresa May looks like she's going to not try and get rid of the backstop, the Irish backstop, but make changes to it. Do you think that will fly in Brussels?
Well, I mean, they already said, essentially, talk to the hand. You know, and you just quoted it. I don't think there's going to be any great amendments, excuse the pun, on this thing. So ultimately, they probably get some kind of a side letter to it, and whether that's going to fly in the UK Parliament, I have my doubts.
Well, one would doubt that, since that's what she tried last time, or something. Absolutely. You know, weasel words. So what about, for example, Germany at the moment? I noticed that there were a whole string of economists that were actually accusing Brussels of being ideological in their, you know, hatred of any sort of Brexit option. Do you think there might be a softening?
Well, I really doubt it. I mean, first of all the European country heads have, every time something like this happens, said, talk to the EU, please. And I don't think it's going to be any different this time around.
So what are the implications? Are we heading towards this no deal?
Well, that's a different question. First of all, the next step in this thing is whether or not the deal, when it comes back to the House of Commons, gets the approval. I have my doubts, as I said. And then what we have to keep in mind, thereafter, what's going to happen is they have to table one of these motions again, and the last time round what some of the opposition MPs tried to do is wrestle the power from the UK government to drive the process.
Yes.
And I think that's the real question, who's going to be in the driving seat as far as this process is concerned.
Why should the British Parliament, given that we've got a system where the government is supposed to act and then the Parliament acts as a sort of second, why should we throw it to a whole bunch of backbenchers? And indeed, this wouldn't be just for Brexit, this would be for every decision going forward. I mean, surely that can't happen, can it?
Well, I mean, we were pretty close last time round, and what they tried to do is sort of to address that second part of your concern here. Yeah. What they tried to do is to very specifically wrestle the power as far as Brexit is concerned. I mean, obviously it would set a precedent. However, what they try to convince the government is to pursue at least, or try to pursue a different path, and the government refuses to do so. So
we've talked a lot about, if a no deal happens, how terrible it will be for Britain. Awful. Can I ask you what would happen in Europe?
Yeah, I mean, it's absolutely clear in my mind that it's not going to be good, economically speaking, for either of the two. I mean, that's very clear to me, and particularly for those countries who are closer aligned to the UK economically. I mean, Ireland comes to mind, but also the Netherlands, Belgium, France, Germany with the car industry and all the rest of it. I think the question from a broader macro point of view is, relatively speaking, how bad is it going to get? And there I think we have to be realistic. It's going to be worse for the UK, relatively speaking, than it is for Europe, and I think that's part of what's driving sort of the power struggle here.
Can you not see a scenario where if there is a no deal that, you know, the market, sensible heads within the market will drive pretty quickly a new relationship that will mean that there won't be sort of big blockages and technology will take over. I mean, even with the backstop in Northern and Southern Ireland, Michel Barnier admitted the other day that it would work fine, thank you very much, without a hard border.
Yeah, I mean, leaving the border question aside, I mean, economically speaking, in case of a hard Brexit, I think the real troublesome issue is that a good part of the trade as it currently happens, or a good part of the economic relationship as it currently happens, is based on a certain legal foundation which is just not going to be there.
Yes.
So the question is, what is going to replace that, and how quickly is it going to replace that? As an example, for instance, the European Commission and the European Parliament have just last Friday announced that they're going to start on emergency legislation to keep the aviation industry going, and there's quite a few other industries that are reliant on sort of the underlying foundation that is just not going to be in place to the same degree at day one. So over time, I'm sure they're going to find some kind of a solution to it.
Yes.
But there is going to be quite a lot of uncertainty that's going to drive the industries down. I'm pretty sure about it.
Peter Schaffrik, we're right out of time, but thank you so much for joining us.
Thank you for having me.
Good. And what a day today. We've now lost both Andrew Thorburn at NAB, and Ken Henry has resigned as well. Phil Cronican coming down from the board into the chair as acting CEO. That's all for the show tonight. Tomorrow night, Nigel Lake, Executive Chair of Pottinger, join me for his take on the Hayne Royal Commission final report. Until then, thanks for your company.